Fair now.
Okay, great. Thanks. Okay, so thank you, Dave and Anka. This is my second rodeo here with the Women's Webinar, having gone with Anka last year. So it's a pleasure and an honor to be back. And I want to thank the market gods for giving us a relatively quiet day after the insane volatility we've had, because this is a good opportunity for me to go through my trading process live in the market. We have a lot to cover. So basically what I'm hoping is by the end of our 55 minutes together, you have a good idea of my process from the macro to the micro in terms of timing my way in and profiting from swing trades, although a lot of these trades are also good for day trades. So let's go on. Now, this is kind of the outline of what I'm hoping to cover today. One, of course, is how do you find an idea? What should you trade? Where do you get your ideas from? Then once you have an idea, having an also a good outlook on what the macro picture is doing or what the overall market is doing. Then also being able to identify phases. We're going to take a quick look at commodities, and you'll understand why when we talk a little bit later. And then more specifically, how we use certain techniques to time our way into the market. And then considering our very current market condition, a general idea of what I believe the next game plan should be. Generally, I usually will do this as a full PowerPoint, but again, because the market is so crazy, I thought I should rip it up. We'll have some of it, but basically go through it in a live format so you can see the screens. So let's start with how do you find a stock? And I say a stock, it could be anything. It could be a commodity, it could be a currency, any idea. One is everybody has the ability to figure out what they may want to invest in, and you don't really even need to know anything at all about finance, and you can identify stocks or ETFs or commodities and market sectors that will provide you with hugely profitable trades, but then you also have to be able to easily decide when to enter a trade and determine how to maximize its profit potential. As we know, there are it's very easy to push the buy button, but what isn't necessarily well known by many investors is how to actually manage the trade, really starting with not only identifying, but is it the best time to enter, what your risk is, what your position sizing should be, and then when you should take some profits. So we're going to get through all of that today when we go live. Now, one of the best ways to find ideas, I find, is, well, there are many ways. One would be what we call a consumer instinct, which is essentially you find a product or you go into a store or you hear about a social trend that you like. And so here's some of the mega trends that I constantly go to as a source of ideas. One would be the whole idea of climate change and alternative energy, which has been really hot and in the recent market correction has remained pretty hot. Geopolitical turmoil, any kind of disorder would give opportunities. Of course, the whole idea of social media and all the social media instruments. The fact that online shopping and e-commerce has really overcome brick and mortar. And then what are the Gen Z and millennials are doing? What's their social and consumer trends? Video gaming, which is still hot, smart TVs and streaming video like Disney and Netflix, 3D printing, which I believe is still one that's in extreme infancy in terms of its ability to turn into a megatrend. Same thing with cannabis, alternative currency like Bitcoin, and then of course artificial intelligence. So that's just a general idea of what I think about on a day-to-day basis and how I start scanning for stocks. Now let's talk a little bit more about consumer instinct, because this is something that I have found some of my best trades with and some very long-term swing trades as a result. And TAN, the ETF for solar energy, would be the one that comes right up the top of my head, in that understanding that oil has really lost a lot of favor and has been really depressed in terms of price. Complete contrast has been how solar energy is starting to really overtake that whole space. And so essentially that consumer instinct came from A, observation, and then B, how I was able to take that and then determine, do I want to look at an individual stock like First Solar or Canadian Solar, or do I want to look at the overall ETF? So the point is that you all have instincts. Everybody has an instinct. It's really a matter of thinking a little bit differently. If you go into Kohl's, for example, and you find that it's particularly more crowded than usual, instead of saying, wow, the store is usually more crowded than usual, you go back home and you look at the chart. That is exactly what I'm talking about. Is Peter Lynch, back in the day, really famous, he became the famous one to coin the phrase of buy what you know. The second thing, of course, is you could have a great idea, but the market environment is going to be the most important thing. And anybody who hasn't learned that lesson in the last couple of weeks, well, then they probably shouldn't be trading anymore. So the other thing is while we might see the market go through an overall tumultuous time, we actually can always find a bull market somewhere. So the liquidity cycle and the economic cycles, they create these trends in all these different sectors, but there are all these other asset classes, and I'm sure you hear the term all the time: bonds, commodities. But right now, where you'll learn a little bit more about me, that I traded on the commodities floor for 13 years. At this point in time, what didn't exist then but exists now is exchange traded funds, which make trading commodities that much easier. So if the stock market, and particular US stocks, are not set up well, you can always look for bull markets in international equities. In fact, I've been seeing a lot of buzz, and I've seen it on the charts, that through this whole downturn, emerging markets have not had as quite a bloodbath as the US stock market has. Or you might find it in some regional ETFs in different countries, or commodity ETFs like gold and silver. Bond ETFs, obviously the TLTs have been one of the hottest instruments on the board, or any other alternative financial instruments that could be interesting. And so what we really want to talk about now is, how do we determine that these are in a bullish phase, even if the market is not? So essentially, the whole idea of swing trading is that you want to be able to trade when the market is easiest to trade. Right now, would you, and you can nod your head to yourself, but would you think that the market is easy to trade right now? Well, the answer could be yes or no, depending on what type of trader you are. If you are a day trader and you're very patient, it's been a great market. If you're a swing trader and you have the wherewithal to go short, well, then that was a great trade. And now, if you're more of a bull type person and you're looking to go long, this could be a good opportunity. That's what we're going to talk about. And then once you know that this is a good time to get into the market, what's the best time to enter a trend trade? And then what's the easiest way to ride that trend with the lowest amount of stress? So before I go any further, some of you know me, a lot of you probably don't, so I wanted to give you a little bit of idea of who I am. My name is actually Michele Schneider, but back on the floor, back in the day, my badge was shortened to MISH, and I have been known as Mish ever since. I am currently the Director of Trading Education at Market Gauge. Market Gauge is a company that's been around for over 20 years. I joined that company about 11 years ago. However, I have over 4 decades of trading and teaching success. So I started on the floor a long time ago, 40 years ago. I spent 13 years on the floor, and then I switched from being a floor trader to an upstairs trader, and then I started entering into the retail space, and then eventually became an educator. I've been a market analyst for 2 of the largest commodity trading firms of their time, one being Conti Commodities, the other being Beige. I am the author of a Best New Wealth book. It was considered by Book Authority to be one of the best wealth books of all times. It was published in 2019. And on Real Vision, I won the award in 2018 as the best trade pick of the year. So that's a little bit of my background. Here is the badge that I won from bookauthority.com. making me not just best new wealth book, but actually one of the best wealth books of all times, which was really quite a distinction. And the name of my book is Plant Your Money Tree, A Guide to Growing Your Wealth. It's a really, really good book, foundational book for people who are either very experienced or newbies and want to learn more about the process that we're going to talk about, and particularly the phases that we're going to talk about. So when I was on the floor, I really was able to train my consumer instinct, even though I was more involved in a specific commodity. So like I was a member, let's say, of coffee, sugar, and cocoa, and then eventually I was a member of COMEX, and then eventually NYMEX, which was the oil markets. So my pinpoint of my instinct was really to focus on the particular instrument, but that was my training ground. And from that experience on the floor, I also started to chart at that point. And back in the day, it was point and figure charts. And that really helped solidify not only whatever I was feeling from an instinctual standpoint, but also what I could see from a 5 cent standpoint, because on the floor it was very active and all your senses were employed, but also then turning that into price and price movement. And from that price movement, using really a kinesthetic approach with my hands, able to really put that all together so that I can see price and how it matched with an instinct and how it matched with the activity on the floor. And from there, I actually really earned a reputation as one of the master chartists on the floor. So let's go through market phases here so you can get a better idea. But before we do, I just wanted to throw in, this is a little picture of me with my award from Real Vision. They gave me a plastic bowl, which is exactly what is in front of the stock exchange in New York. But what's important about this is really what you're going to want to learn today is, why did I find this trade? Why did it grab my attention? And how I actually wound up doing really well and winning this award. So one last thing I wanted to show you is, I mentioned the point and figure chart. Here it is, me holding it back in the guess the decade with the big hair. And then here I am amongst all the men. This was in Business Week magazine a long time ago, because oil had dropped a historic low at that point. And the news came down and took a picture. And the reason why I'm so happy I saved this through all the years is because you can see, as a woman webinar that we're doing today, I truly was one of the very, very few women who spent so much time actually in the pits. So what I learned: charting, follow price and momentum, follow the hottest trends up or down, and most importantly, how to really understand risk and reward. So here we have the phases. I use 6 phases. And in the 6 phases, we always like to start at the top or high noon. What I have done is I have also attached an emotion to each one of these phases, because I think it's really important. You see these gauges all the time, measuring what the overall sentiment is, and if it's an extreme fear, people say it's a bottom, and if it's extreme euphoric, people say it's a top. But nonetheless, we have been in a very long time, although we've kind of jumped around phases through the years, but for a very long time we were in a bullish phase, and now obviously we are not. And that was when euphoria did reach an all-time high. In fact, a couple of weeks ago when the market peaked, the volume was so strong to the upside, it really was almost like the final icing on the cake for this particular collapse that we had. Then what happens is, eventually we do get some kind of fear in the market and we go into a caution phase, and that's when you start to see anxiety build up in people and investors. And if things can go from bad to worse, as we have seen recently, our current phase in a lot of the instruments right now is distribution, which means that essentially money has been literally distributed out of the market into cash. And of course, we're in a state of fear, and that's what we're seeing right now. What we haven't seen yet, but could be inevitable, would be if things go even worse from there and we go into a bearish phase, or could be a recessionary period, could be a stagflation period, or what have you. And then of course that's when you see the emotion being more in despair. But what's so incredible about human nature is that we are a hopeful species, and that you see reflected in the market all the time, like what we're seeing today in the market, with the market going up, particularly going up on some kind of hope. not necessarily having anything to do with the virus, but we happen to be in an election year as well. So it doesn't matter where the hope comes from. What matters more is, does it have enough hope to change the phase into what we call a recuperation phase? And then if that hope starts to grow on itself, we go into an accumulation phase, which is the opposite of distribution, meaning that the money starts to come back and accumulate into equities. People become more optimistic, and then again we are back in a bullish phase when things get really good. Now, these are clockwise, but it doesn't necessarily mean that it has to go so smoothly in a clockwise fashion. We have seen plenty of bullish down to caution, back to bullish, back to caution, back to bullish, back to caution. But even that's information, because when you start to see those phases waver back and forth, then you know we're getting close to some kind of inflection point. How we measure and determine these phases, that's what we're going to look at when we go live to the market. So these are some of the questions that I want you to think about as I go through. Is, what would you consider, or what would I consider to be the best phase change to trade? Everybody's got their favorites. I have mine. What should you do? Let's say you miss the first entry point on a phase. What could you do as a result of that? How far away should you set your stops when you enter a trade? Where should you place your targets? And when should you move up your stops or add to a winning position? And then when should you just say, you know what, the general market is telling me stay out, or certainly the thing that I like or the instrument I wanted to buy, maybe I should be a little bit more patient. So let's go live now into the market, and what you see here is my screen of my TradeStation, and what we're looking at right here is the SPY. What I want to do really is everything I just showed you, which is from where I come up with my pick to how I actually determine the phase, look at the overall market, and then really time my entries and exits. This is exactly what I want to do live and really dive into some of these charts. Now, before I do that, let's start with going back a little bit, which is, how do we find ideas? Now, as I said, sometimes I will have ideas based on different instincts or different trends that I see that are hot, but I can also find ideas through our scanning software. And let me show you that. This is my members get bullish and bearish scans every day on the website. And so essentially what this scanner does, and you can see how short it is right now. There's only 5 instruments on here, and obviously it's because of the condition of the market right now. But you can see that you will get, and this is exactly what I vet and then trade myself along with my members, what is changing phases. So you can see Lennar, you can see ICE, HHR, which is a small little stock, FXY, which is the yen, and eBay, all actually improved in phase. And if you wanted to just see the difference, by the way, in terms of the bullish to the bearish, on the bearish stocks, obviously you can see the list is a lot greater. So if today turns out to be a sell opportunity, then the members would be going to this list as well as I and trying to pick out things that have actually deteriorated in phase, and what might be an interesting thing to look at. So now let's go back to the charts here. And let's just pick, we'll go to the macro picture, but what I want to do is just pick one of those right now that I said I thought could be interesting. So let's go to eBay. You saw that that was on the list. And the reason why it was on the list, and I can explain my charts better now, is because it cleared the 50-day moving average yesterday, so it went back into a positive phase. Now, it wasn't a bullish phase, it was actually more of a recuperation phase. So essentially, without spending too much time really walking through how we determine each phase, just know that what we're looking for is 3 things. One is the relationship of the 50-day, which I'm always going to depict here on every chart consistently as blue, and the 200-day, which I'm going to always depict as green. Not only the relationship of those 2 moving averages to one another, the slope and look at the slope is of physics. It means if the slope is neutral, then basically the market is basically telling you that it's changing phases, but it doesn't necessarily mean that it's strong. If it's on a positive slope, then you can say the momentum is greater, and in the negative slope, it could be a fake out. And then finally, the price. The price has to be either above or below the 200 and the 50-day moving averages to determine the phase. So with eBay right here, this was not one that I put on my list, but it's certainly one that's interesting. You can see that it went back into a recuperation phase, and today, now that it's clearing the 200-day moving average, it's going back into an accumulation phase, which is a good positive phase. Just that I showed you, we started to see money come out of this stock, and now it's going back into it. Now, eBay could be a hot stock trend-wise with the coronavirus, only because, you know, if people are staying home and they're looking to shop through e-commerce, this certainly fits the bill as one of those places one could go. So this would be a legitimate thing to look at. Now, notice that I also have weekly charts, monthly charts, and 30-minute opening range charts. So essentially, if you're looking at the weekly chart, it's the same idea. It's a 200-week instead of a 200-day, and a 50-week instead of a 50-day. And you can see that not only through this whole correction, except for this 1 week a few weeks ago, and then last week that it just about broke, it actually has held that 200-week moving average, and look at the slope on this. Now, 200 weeks is a long time, so it would take much longer to see a slope change on this, but nonetheless, that tells me that if it holds this level, then you had a good point of risk. And with it clearing now the 50-week, even though we're not done with the week, we can say that if it holds about 37.50, that might not be a bad play. Now, again, this is not a trading recommendation. This is just a mention of the process. Then I look over at the monthly chart. And the monthly chart, we can see there's an 80-month moving average right here. That to me is an extremely important business cycle. That's about 6 years, which generally is what a business cycle is. And it's not only retraced to it back in 2018, and after we had the big correction, it held it in 2018, but now we didn't even get close to it. We tested what is a shorter term, which is about a 2-year trend or a 23-month, and it's back through it there again. And in fact, look at that. It's having an inside month, which means it's right inside the range that it made in February. Then finally, if let's say we decided that today, after seeing it on the scanner, the fact that it had broken back over the 50-day moving average and improved in phase, we wanted to trade it today. The last thing we would do is we would look at, this is the 30-minute bar right here, and in the 30-minute bars, you can see that I have pivot points. And the other two things that I really look at here when I'm looking at these pivot points, come on, is whether or not, I'm trying to bring this down so you can see it better, is whether or not the first bar, which is your 30-minute opening range bar, we took out the high of that first bar. And you can see so far it's getting close to it, but it hasn't actually taken it out yet. So this would be the kind of thing where if you were an active trader, you might get a nice pop end of day, particularly if the macro picture is in line, which so far we'll see and we'll take a look at. Or if you're more of a swing trader or even a short-term swing trader, then you might say, okay, how much would I risk on this trade? And if it closes in my favor, should I take it home? So these are all the questions that we were talking about, but let's go on to take a look at a couple of other things. Like, for example, I really like to take a look with you because I think what's so important right now is what happens with the indices before you get involved in any instrument, because you saw even the best of instruments, when you're getting huge moves down like we've seen over the last week and a half, it's going to be hard for almost anything to hold up. So in this case right now, here's the SPY holding the 200-day moving average below the 50. That puts this right now in a recuperation phase because it's back over the 200-day, and then here it's back over the 50-week. But this week, last week, was humongous. Look at the range of this week. So right now, All we know is that it's holding up back over these moving averages, but we don't know if it's going to have enough gumption to get clear the high of last week. So we look at the monthly chart. The monthly chart is sitting on the 23-month, and you can see here's that 30-minute. Right now, it broke out of the 30-minute, but really what we want to see now is the first level of resistance, which would be the green line right here, or R1. That it's a 314.15, so it still has a way to go. That's another $5 from here or $4 from here before today looks like anything more than just a little bit of a short covering rally. So the macro and SPY is telling you not bad, but not time for everybody to jump into the water yet. And then we look at IWM. IWM happens to be the Russell Small Caps, and that does not look as good. Hasn't looked as good. While the SPY was making new highs almost every day for a while, the IWM, or the Russell 2000, and by the way, extremely important to the economy's picture, couldn't even get back to 2018 highs during this last big run that we had before the crash. Why? Because even before the coronavirus, what this was telling you here was that the economy itself, and particularly the manufacturing or the supply side, hasn't been healthy the way one would think looking at SPY or NASDAQ. It should be. And so this to me is extremely important. And here what we have is a very different picture. We're not even back over the 200, although we're getting an inside data yesterday. We're having the inside week. The best news we can see here is that it's back over the 200-week moving average. We are underneath the 23-month. And right now we're just starting to clear the 30-minute opening range, but we still would have to get through the hurdle of R1 right here, I think, in order to be convincing, because we have not been above R1 for a while. So that's that picture. Let's just go through it real quickly. Let's take a look at NASDAQ, which has been the strongest. This never broke the 200. This is still having an inside week, never broke the 50-week, never broke the 23-month, or even tested it. So what does that tell you? That if the market is good, you always want to buy the strongest sector. And then I would be looking at, as we just looked at, is eBay, by the way, which is in the NASDAQ sector. We would be looking more at the NASDAQ to lead this market into any kind of correction. And how long and sustained that correction would be very much determined by whether or not we can see some catch up in the Russell 2000 and the rest of the group that I'm about to show you after we look at one more, which is the diamonds. And that too is underneath the 200, underneath the 50-week, sitting on the 23-month, just having an opening range breakout right now, except still has to clear R1. So we're getting close. The possibility, the question of going to be is how long. So now that's the first part of the macro picture that I look at. And every day, not only do my members get the scanner, but they get 2 live videos a week from me where I go through this process and I explain to them what the macro picture is looking like, and also the modern family, which is something that a phrase that I've coined, which is basically what I think is the inside of the market, or the more salient aspects of the US economy, and extremely important to consider if you really, really want to understand what's going on longer term. Now, looking at the phases here, this is IWM again, just at a weekly chart, 50-week, 200-week. So this is exactly what we just saw, holding the 200-week, still underneath the 50-week, still inside this huge bar. Better, but certainly not like screaming buy, at least not yet. Here is regional banks. Why are regional banks doing so poorly? By the way, you can see now here that the 50-week crossed under the 200-week. This is the only instrument that's in a bearish phase. And look how far it is from those moving averages. So we would really have to see at the very least maybe a hold here at 48. And as we go into the end of the week, we'd want to see if this thing can get back up to 50. And then maybe we can say that the worst is over. But looking at this, it certainly looks pretty dismal. And then here is transportation. Transportation, if IWM and the Russells are the supply side. This is the demand side. And obviously you can see again, this is getting a bounce today, but this is in a distribution phase because it's underneath both of the weekly moving averages. The slope on the 50-week has already started to turn negative. This, of course, would take much longer time to do that, so it's still positive, still inside last week, and still not really showing us anything more than just today, a little bit of a relief rally. So you really want to watch these two sectors, IWM and IYT, as again, you may get a nice pop and NASDAQ would lead the way, but if it's sustainable, you have to look there. You have to look at these things to see if this is just a pop, if the economy somehow feels with the rates that got dropped yesterday is actually going to improve for stocks or not. Semiconductors would be kind of like NASDAQ, it's the tech. This is in the modern family because not only is chip technology really have ruled in terms of sectors, but it also is a highly speculated area, obviously, with stocks like NVIDIA, etc. This too is getting an inside week, and this never broke the 50-week moving average. So this is one of the reasons why I would have never gotten short while we were collapsing and after we had collapsed to all those levels. If anything, I would have been looking to see where the market was going to hold. And you can see here, historically, IWM is kind of held around this 144, 145. This didn't even break down. And then if we move over here, biotechnology stocks, this is also in the modern family because it's a cyclical, which means it's something that people buy when the market is good and the economy is good, but also something in a non-cyclical they have to buy because people need their medicine. And with the coronavirus, a lot of the drug companies have gotten huge gains because they're all madly working on trying to come up with some vaccine. But even with that, this is still in an inside week, but you can see it never broke the 50 weeks. So this would be another place to look at if the market decides to go back up. And then finally, probably one of the most depressing pictures right here is brick and mortar retail. So even though e-commerce has done so much better, our gross domestic product is measured mainly on brick and mortar retail. And we had a whole slew of terrible earnings coming into today: Foot Locker, Dollar Tree, Ulta, Ulta Cosmetics and stuff. So you can see that this too is well underneath in a distribution and also having an inside week. So if you put that all together, essentially what you're seeing here is from a macro view, we are a little bit hopeful here with some of the stronger groups. IWM is trying to play catch up. Semiconductors and NASDAQ and biotech would be the most interesting things to look at if it firms up a little. But if we cannot play catch up on any kind of a serious way over the next day with some of these weaker sectors, I would be very hesitant on holding anything for more than a much shorter term situation. So now let's go through a couple of the commodities that I wanted to show you, because remember in the beginning I said that sometimes there's always something in a bullish phase, even if the rest of the market isn't. And in this case, it certainly has been gold. Gold and a bullish phase means that back here at the end of 2019, this cleared over the 50-day moving average. Once it clears over the 50-day moving average, and here's a great opportunity to take a look and see how we would time our way into this particular instrument. So once you get 2 days over that 50, the ideal entry, and a big part of my process is to vet to see not only if we have a confirmation of a phase change, but is my risk relative to how far or close it is from the 50-day moving average makes sense. And in this case, when this happened, the high that day was around 140. The low was actually, believe it or not, it was look at how tight that range was that day, a 50-cent range, which means that essentially we could have looked at the day before and we could have risked $1. And by the way, this trades about $3 a day. We could have risked $1 to get long, and look what would have happened. We could have either still been in it at this point, but we probably would have taken profits along the way. And now here we are today, still in a bullish phase. So what does this tell you? With gold still being strong and so outperforming SPY, that's something else just to keep in your little mind there to understand that this too still is reflecting the fear in the market, which points more to the idea that we may be just getting a short-term rally. Now let me just show you GDX, because GDX is something that we actually, when I was just showing you the gold, we got into the GDX. We bought GDX on this day. We paid $27.64 for it. We actually risked underneath 27.05 because that was the low that day, and we gave it a little bit of fudge. So we risked 26.94, buying at 27.64. That's a very tight risk, because if we were wrong, we would have been out right away. And being right, we were able to take a profit pretty quickly at 30.34. Now, remember I also said in the beginning, what happens if I miss that first move? What should I do? Very often you'll see a retracement back down to the 50. So this gave you a second opportunity. And then it gave you a little bit of a fake out here because it broke down under the 50-day moving average, but then it cleared it strong on this day. And at this day, we got back into it. And some of my subscribers were still in it because they had a no loss stop and it never got back down to 27.64, added to the position here at 28.43. And because we used profit targets, we took some off at 30.34. We actually got out of some on 31.74 this day. And then we finally got out of the rest of the trade when it broke down under this moving average, which is the 10. And now look what's happening here. We broke down with the rest of the market. Everything had a liquidity crunch, including this, except for gold. We got back over the 200. We had a big bar yesterday, and now it is clearing the 50-day moving average. So what does that mean? Would this be a good opportunity to buy? Well, remember, I look at the whole thing. It's strong on the weekly chart. It's not bad. It's having an inside month on the monthly chart. But so far today, it has not had an opening range breakout, which means it hasn't taken out its first 30-minute high at 29.18. So that gives you a general idea of what you might be looking at in terms of my process. So I come up with the idea, I look at the phase, I check the macro, I see if it's going counter, and then I actually will look at the modern family, and then there's two other things that I will look at before I make a determination, just to make sure specifically if it's a commodity. I will look at the interest rates. So you can see we're actually long TLTs since this level right here at 142. We've already taken 3 profit targets, so we're riding a tail here. But more importantly, what the interest rates are telling you right here, obviously, is that the central banks, which have actually lower rates than we have, are really trying very hard to keep monetary policy easy, which is making it very, very good for corporations to buy back their own stocks, but also potentially wreaking havoc on what could happen later on, which would be more sparking inflation, particularly if we look at the DXY here. Okay, I'm not going to be able to get that. Let's look at the euro instead. It's the mirror image of the dollar, especially since the dollar, as this was declining, the dollar was getting really strong. Then the dollar started weakening as this went up. So here's the final piece of the puzzle for me, which is what happens in the second half of the year is really going to depend on this. If the euro can continue its run and take out, look at this 50-week moving average right here. If it can take out the 50-week moving average and close on a weekly basis over 105.70, then it's possible, with the dollar dropping and the rates low and commodities already showing signs of strength, that's going to be your best opportunity as we get into the second half, even if the rest of the market is selling off. So let's talk a little bit now about a couple of other things that I'm watching right now, just so you have a game plan. Let's go back to the SPY, just so you can see where it's at. So now let's assume that the SPY holds up here and can hold the 200-day moving average. I would certainly give this another day. Then here's a couple of trades that I'd be looking at going forward. So I wanted to give you a bunch of stuff that had potentially or already reported earnings, and had good earnings, number one, and number two, could become in more constructive phases. Now, remember I said megatrends before? Well, I wanted to show you this because this is the stock that I won the award for with Real Vision for the best trade pick of 2018. This is 3D Systems. So 3D Systems, let's start with the weekly chart here. On the weekly chart, when I gave it in 2018, by the way, it had just was about to report earnings, and I said if it got through 10, I thought it was going to double in price, and it did it in just a few weeks. And the reason why was because once it broke through 10, if we went back on the daily chart, you will see it was also improving in phase, and the overall market condition, because this was in April, long before the crash at the end of 2018, was also starting to improve. But that's a little bit of history here. This reported well, and even in the big dump that we had, look what happened. It's held the 200-day moving average. So we're getting an inside day today. We're sitting below the 200-week moving average, excuse me, the 50-week moving average. Let's see where that comes in exactly. Actually, we're sitting above it at 915. This is an exponential moving average. So to me, if it breaks out over 10, it's not quite back over the 50, but at least we know that we have a good line of support here at around 9. And you can see today so far it hasn't been able to clear that R1 level either. So that would be one of the ones I would choose that is in a decent phase, but not in a strong phase. Another one is OLED. Now look at this. OLED is definitely not in a good phase on the daily. It's in a distribution phase, and if this crosses, it'll be in a bearish phase. It's below the weekly moving average, but this is what interests me right here is how it's sitting on the 23-month and held 140 support here on the breakdown. So that's another one to keep an eye on. Probably not as strong as the DDD trade, but then also let's look at Microsoft. So let's look at something that's in NASDAQ. We already looked at eBay, which by the way looks a lot better than this. But this would be another one, holding up on the weekly, strong on the monthly. Even though we're underneath the 50-day moving average and having an inside day, that would be something that you might want to look at too, is if we can get 2 closes above that 50-day moving average, which is right now over 169. So just to kind of repeat the process here, essentially what you're seeing right now is a process. Pick a stock or an instrument or a commodity. Also look at the scanner that I look at, which I provide to my members. Go through the list and decide which ones look good. Check out the macro situation. What is the indices doing? The Modern Family doing? What are commodities doing? What are the dollar doing? And what are the interest rates doing? Then look at the phase of the particular instrument that you're looking at, and then look at the first 30-minute action of the day. And that should help you determine whether or not it's going to break out of its 30 minutes or break down from its 30 minutes. And then you'll see a couple of other things that I do look at on my chart. For example, I will look at the relative strength index to see if it's overbought or oversold. I'll look at the average daily volume, this yellow line being the average volume, to see if it's exceeded the volume or not. But those are a little bit more sophisticated. Right now, all you need to know is if it's changing phases, what that does is it gives you absolutely the best opportunity to get long the market. Okay, so let's go back to now the PowerPoint. So I wanted to give you a flavor live in the market, as I said, because I thought it would be really important for you to really see the top-down approach and then how I specify it to a particular instrument. So what if you could use my expertise for your own trading success? That would be a question that I would ask here. And I'm not going to profess that there's any kind of get-rich-quick schemes. There is none. But I will say that in terms of performance, because we've been long bonds and long metals and long some of the other soft commodities, we have well outperformed the market. And while everybody else might have been sweating bullets over the last week and a half, we slept very soundly, because that's what I do. I confidently identify the big trend trading opportunities. I trade without worrying about the next big correction because I know how to manage the position and position size correctly. And I really have not only enjoyed building my own wealth through trading, but obviously I really like doing that every day for my members. So if you became a member and decided to join me, this is a really good time, because as I showed you before, we're either potentially bottoming out and could go much higher with a lot of instruments having great value at this particular point, or we could just be on a pause and setting up for another down move, in which case, considering what I mentioned to you about the dollar and the interest rates, could be extremely explosive for commodities. So one of the things is I never do a trade for my members without giving a real-time trading alert. So if we were looking, let's say, at 3D systems, as I mentioned before, and let's say we were looking at it to break out over 10, you would actually get an alert, through a text and email that would tell you here's your buy stop. Then you would get an alert when it actually signaled with the actual sell stop and a target, and then all of those alerts would happen through all of the trades, and then they would be updated accordingly. You also, and that, by the way, is a value of about $1,997. You also get the daily analysis. Now, some of you might know that I do a free daily, but I also, for my members, do a more extensive daily analysis where I add about 10 to 15 ETFs that I think could be potentially setting up, mainly in the ETF space of commodities, country funds, and currencies, and other sectors that aren't in the modern family, like, for example, utilities or real estate. And that's a $997 value. I also, just like you saw with the training video I just sort of did for you now live, I do that twice a week, and that's a $497 value. You get that trade scanner every single day, where you can either find your own ideas or know that I find the ideas from that scanner, and that is exactly whatever I tell my members to do. I'm doing the exact same thing. Plus, something that's very unique to Market Gauge is we actually have VIP support. So we have great customer service. You never have to worry about your email or your voicemail not being answered, just the opposite. We are right on top of it, plus very easy access to me, either through Twitter or through email, etc. There's many ways to reach us directly. So we are real people waiting to help. And that's a total value of $4,785 right there. But if you became a member now and decided to work with me for a year and really see how the whole system works, so you get an education or I just feed you the trades, we're taking that $4,785 value and we're slashing it down to a price of $997. And so we'll talk a little bit more about that, but one of the support people that I didn't mention is, besides Mary, who is our customer service person, we have Rob Quinn. And Rob, if you took down this number, if you wanted to get more information, not just about my product, but we have many other products, including some fabulous quant models, then you would simply call him at 407-770-7637. Now, on top of that, we're also giving 3 active bonuses, fast action bonuses. One is a bonus that we call Trading Essentials, and what that is a course that fills in some of the stuff that obviously I didn't have time to cover right now. More information about the opening range and fine-tuning your entries, fine-tuning your targets, fine-tuning your stop losses and your position sizing, and a general idea of how we put this all together. 2, and that's a $497 value. 2 is Position Sizing Tool and Trade Journal. The number one hangup that most people have with trading is they buy too much and when they're losing money, and too little when they're making money. This sizing tool helps you determine, based on how much equity you are trading with, exactly how many shares you should buy or sell based on the parameters that I give you, which is your entry, your stop loss. And also a trade journal, because I find if you stick to your plan, that is really the most helpful way to become a better trader. That's a 197 value. And then the third value bonus is my phase trading boot camp, which is a live in the market trading, except much more extensive, where I go through all of the different principles that we just discussed today: the macro, the phases, the opening range, the entries, the risk, etc. And even if you decided to leave the service, these 3 bonuses stay with you for a lifetime, plus you have instant access to them. So again, that if you add up all the value of what you get for the membership, which is Mish's Market Minute Premium, and the 3 bonuses, that comes to a value of $5,576, but for today it's $997 for the entire year. So that's essentially the what I wanted to give to you today, and I also wanted to give some time to answer some questions. So if there are questions, let's see, I'd like to know where I actually find them. Dave, is there a place where I can look at the questions?
Yeah, if you move your cursor up to the, well, there isn't any at the moment, but yeah, for everyone in the room live right now, if you have any questions, just type them in the chat box. But yeah, you can see them by moving your cursor to the top, and the
Okay.
Zoom thing should pop up it'll probably have a more button and a chat thing that you can click.
There
It
we
pops
go.
up.
Okay. All right. So, well, I don't know if I never know if it's a good or a bad thing if people don't have questions. So if you are interested in joining me, just mention again, it's www.marketgauge.com/advantage, or you can call Rob at 407-770-7637. And since we have 5 minutes left, what we could do instead is we can go back to my charts and take a look at a couple of things. And I would certainly be happy to look at any particular instrument that anybody would like to look at. If I'm going to walk away from this screen, Dave, if somebody has a question, you can let me know. If not, I'll talk about a couple of more things that I'm finding interesting, or stuff that we're in right now that I think has potential. So I'm going to switch back over to my screen here.
Okay. Yeah, I'll let you know.
Okay. Actually, I can move this kind of out of the way down here so I can see. All right, so I had mentioned to you that if the dollar weakened and with the interest rates low, and particularly if today's rally turns out to be not much more than what we're seeing, which is a good short covering rally, and even if not, even if equities go up, then what we also might want to look at is some of the soft commodities. So there's a couple of ways to look at that. Oh, and I do have a question. Are these trades typically daily or longer? I'd say they can be daily trades or they can be longer. Somebody wants me to look at Microsoft. I'll look at that again. But let me just go back to, here's a perfect example of a trade that I had given to my subscribers last week, which was this is actually Humana. I had noticed when the market was selling off that this held the 200-day moving average, and it was above the 50-week moving average. So I mentioned that if it cleared 320 on this particular day, you could have a very tight risk for a day trade, which means you would risk to whatever the low was that day, or you could hold it for longer if it closed in your favor, and I gave some targets. That day, I actually gave a target of 345, and the high was 346. So to answer your question, Joseph, that could have been just a great day trade, and you could have called it a trade. However, if you wanted to stay with it because you were convinced that this was a good trade and you made so much, you would have probably either raised your stop to a no loss that day, and you would have just marginally stayed in it yesterday, or you would have gotten out and said, gee, now look at it, back above the 50-day moving average, and is this still something I want to get into? So that's when I say some of these are day trading, some of these are much longer trades. The GDX trade I showed you, we were in that for a couple of months, 2-3 months. And then the nice thing is you can day trade around your position trades according to what the phase is. Okay, so somebody asked about Microsoft. Now, I did actually go through it, but I'll take another look at it. Vicki, no problem. So what makes Microsoft so interesting is we have a couple of issues to be worried about here. And that is this declining slope on this 10-day moving average, number one, even though it's sitting strong on the weekly chart. And number two is we still haven't gotten back into a bullish phase. If it clears the 50-day moving average, it'll be back in a bullish phase. It has to do it for 2 days. Not to mention that we have a tremendous amount of resistance up here at the high that we had the other day, which was 175. So essentially, what I would do in a situation like this is, first of all, you have a $9 range on this stock. So obviously you're not going to buy the same amount as you would do for a stock that only trades 45-cent range a day. You would obviously have to buy fewer shares. But nonetheless, what you try to do is not risk much more than 1 to 2 times the ATR. An $18 range for this means for some of you that might be buying only 5 shares. For some of you it might be buying more depending on how much money you're trading with. Doesn't mean that you should stay away with the trade. It just means that right now if we can get a couple of closes back over 169, and really I would say 170, I might buy a starter position, risk to about 164, so I wouldn't even give it a full ATR. And then if it cleared 175, I might add to that trade. And as I mentioned to you earlier, it would really have to depend on what the overall market is doing. And right now we're seeing a little bit of a rally here, which is great. In fact, TLTs just went slightly negative, and the dollar has strengthened a little bit. So what we could say right now, that this would be certainly one as one of the stronger instruments to look at, but it's not quite ready yet. So any other questions before we run out of time here? I see we have actually pretty much run out of time. Okay, well, so I hope that you guys see that there's a whole process here. It's very logical, it's very methodical, it's very repeatable and very teachable, which is really the key. No matter whom you decide to follow when you're trading, you always have to make sure that there's a process involved, and in that process it's consistent and they can explain it to you. Unless you want to be a seat of the pants trader, some people are very good at that, but for the most part, after all the years I've been doing this, seat of the pants trading worked great when you were scalping, but in this type of market, you really have to understand all of the elements that I just gave you and be able to make a determination to keep your risk low and let your profits run. So with that, I want to thank you all so much for being with me here today. You all have a great rest of the afternoon with the rest of the wonderful women that are about to present, and I hope to see you guys in the future. And by the way, if you want to follow me on Twitter, @MarketMinute is my handle. Okay, thanks so much.